Hello and welcome to PolicyBazaar. I'm Arjun Bhagat. Now, health insurance is an integral part of our insurance portfolio, and although it covers expenses related to hospitalization, doctors' consultations, medical bills, and even surgeries, there are situations when even your regular health plan may not suffice. Now, this is when you would need riders. They serve as additional benefits over and above your existing health plan. However, given the wide array of options available in the market, deciding upon the appropriate riders can be a challenge for most of us. So how do we differentiate the most important ones from the least important ones? Well, let's find out more about health insurance riders today. And for that, we have Yashish Thaya with us, CEO and co-founder of PolicyBazaar. Welcome to the show, Yashish. Tell us about riders. What are they and why are they so important?
Okay. So riders are exactly the same as when you're having pizza. For those who've had pizza, it's the toppings. But it's not a meal in itself. So one has to be very clear what riders are. The base pizza is there, and then you get some toppings, right? But you don't make the rider your meal. And I think if you looked at a health insurance plan, the basic health insurance plan covers you in case you are hospitalized and you are there for more than 24 hours. Then the hospitalization plan, the health insurance plan pays. However, there may be conditions which may go outside of your sum assured. So suppose you have a 5 lakh rupee sum assured, there may be conditions which can have costs of more than 5 lakh rupees. They can be accidents, they can be personal, critical illnesses, they can be other expenses that get incurred. They can be surgery expenses. There could be loss of income, and all of these can in one form or other be purchased as riders. So you could even have specific disease coverages as riders. So there's lots of options in riders. The point is each of these riders is very specific to its plan. So every plan does not have the same riders. So if you're buying a plan from Apollo Munich, or you're buying a plan from Max Bupa, you're buying a plan from Religare or Reliance Health, they may all have very different riders on each one of them. So I think that's the situation.
But you're saying they're important and they enhance your health covers, but they don't seem to be that popular. And why is that the case? Why aren't people actually going for them? Is that a cost factor, or is it an awareness issue? What is it?
See, the basic thing is not many people have even gone for basic health insurance so far. So of course, information or knowledge.
So when you say people haven't gone in for health insurance plans, what would the percentage be in India of
The
people?
total amount of new health insurance, first year health insurance plans sold to consumers in India is less than 2,000 crores in a market where insurance is roughly about 2 lakh crores. So it's a very, very small percentage of people who come in and buy health insurance plans in the first place. It's increasing very rapidly. It's a very, very small number still. So the fact that people are buying health insurance plans in larger numbers is encouraging. I think for people to become aware of what are the riders, and also the sales force is, to be fairly honest, it's fairly low skilled or low trained. It's no surprise, because if you look at the quality of the sales force, it is not adequate. So clearly the mechanisms of communicating to the consumer about the riders are very weak. And hence what you're finding is that while standalone critical illness plans have started selling somewhat, the riders have not, because the explanation of those riders is not enough. And for the people who are genuinely worried about those particular situations, they go in for the standalone product.
Right. So now, one is actually seeing, when you go to the net to buy an insurance policy, you're getting that option. So they're telling you, these are the add-ons that you can buy.
Yes.
For the benefit of our viewers, tell us what are the top 3 add-ons that you feel are a must if you have a good health plan. You have the basic policy, now you want to add on to it, and also why?
Yeah. So the first and most important one is critical illness, because these are those 5 to 35 critical illnesses which, if they strike, will basically bust your health insurance plan. As in, if you have a 5 lakh rupee cover, they will go above that. And more importantly, those are times when you don't want to think about money, you just want to get on and kind of take care of that particular situation, and the money should just be available to you. So I think critical illness riders is the most important. Second would be personal accident riders, because personal accident riders can cause long-term disability or death, and those can be paid for by the personal accident rider. The third one that I would typically go for could be a hospitalization rider. See, a hospitalization rider, when one is in hospital, think of what all happens and what all is paid for and what all is not paid for. So if I go to hospital, I think what will happen is one of my relatives might stay around as a carer. There will be expenses, related to my being in hospital, which will not be covered under health insurance in any way, which may be, parents and family traveling back and forth, getting food items, getting some, additional care for myself. So all of those do get covered somewhat in a hospitalization plan. So what a hospitalization plan does is pays maybe 2,000 to 5,000 to 10,000 rupees per day for the entire duration that you are in the hospital. So you may be in hospital for 3 months, and for those 90 days, every day, maybe 5,000 rupees is paid out. So maybe 4.5 lakh rupees. And no bills are required for this, nothing is required. It's just the fact that you were in hospital. So I think these three, I would say, are perhaps the most important ones. And then you have various, like, daycare procedures. You could have something post and pre-hospitalization. You could have certain nursing costs taken care of. And all of these do come in the form of riders.
So what about in terms of costs? How much would they add on to your basic health plan in terms of cost?
Yeah. So typically, the riders would add about 15 to 30% to your basic health plan. If it is more than that, I would suggest going for a standalone plan. So suppose you're buying a 5 lakh rupee base health plan and you want to buy a 5 lakh rupee critical illness. That could come in as a rider. That is 5 lakhs plus 5 lakhs. Right? However, if you wanted to buy a 10 lakh rupee critical illness plan, which is what I would actually suggest, then I would say go for a standalone critical illness plan, because it's significant enough. And the cost will not be 1/3 any longer. The cost will probably be maybe 60%, 70%. So if the cost of riders is more than 30%, as a rule of thumb, then I would say please go in for a standalone plan, because the standalone plan is probably going to be more, robust and kind of supportive in terms of a longer duration.
So now you've got add-ons, and then you've got top-ups, and then you've got super top-ups. Distinguish all these from each other. And when do you decide, all right, I want to add on, or I want a super top-up or a top-up? How does somebody go out there and say, all right, this is how I'm going to insure myself and my family?
To an extent, it depends on age and profile and a lot of other things. But let's take a simple case of somebody who's about 30 and is taking a health insurance plan along with his family and young family. Suppose they are, as they buy the health insurance plan today, they may think that 5-6 lakh rupees is sufficient to provide the cover, and they may be getting the 5-6 lakh rupee cover for, let's say, 7,000-8,000 rupees. Right? So they spend this 7,000-8,000 rupees, which is roughly about 600-700 rupees per month, and they get this cover of about let's say 5-6 lakh rupees. Right? Now, as time progresses, they are now 40. 10 years have passed, and the average health medical insurance covers in the market are now 20 lakh rupees. Right? So there are two ways. One is they could have some kind of a increment in their base plan, or they could have bought a top-up. Now the top-up cover for the same person, for the 31-year-old family, from 5 lakhs to 25 lakhs might be about 3,000 rupees or 4,000 rupees. So you take the top-up cover. Top-up cover basically means you don't have a sum assured of 5 lakhs, you actually have a sum assured of 25 lakhs. But the top 20 lakhs will only kick in once the first 5 lakh rupees is exhausted. Right? So top-up is basically increasing your cover and protecting yourself for the future. Also, when you retire, the top-up comes into play. Now, add-ons or riders, whichever one you choose, is a very specific plan which you are purchasing to cater to a very specific need. Now, you may have critical illness, you may have personal accident. These are the two big events that can make your health insurance very inadequate. See, 6 lakh rupee cover today is good. Unless somebody suddenly has cancer, or somebody suddenly has a brain surgery, or somebody suddenly has a significant heart disease, then the 6 lakh will suddenly look very small. Because I have seen costs go up to 20 lakhs, 30 lakhs within a span of 1 year. So in that situation, you do need to have a critical illness cover. And suppose a disability happens, person loses income, etc. Then you need to have a disability cover. These are separate. And I would actually not suggest taking those as riders. I would suggest taking them as standalone plans for most people. In addition to that, if you think there is still scope and you have the capital with you, you can invest a bit. Do invest in a hospitalization plan, because there will be additional costs. So typically the total cost that you will incur in case you fall sick, only about 60% of that will be covered by the health insurance plan. Typically, because typical health insurance payout is about 50,000 rupees, and when somebody falls sick in those days, there will be a cost of 2,000-3,000 rupees per day, which will be happening in addition to that. That will never be covered by.
So that really reinforces your entire
cover. It basically makes sure you will not lose out because you fell sick.
Is there a limit to the number of add-ons you can take on a health?
No, there is no limit to the number of add-ons you can take in health insurance. You can take as many as you wish. But as I said, if you're taking the add-ons very seriously, then also look at standalone add-on plans which cover the same.
Now, some people have started porting their policies,
Yes.
their health insurance policies. What happens to the riders in that case? Suppose another insurance company that you're going to doesn't have the same kind of features. So what happens at that point of time?
Yeah, so when you port your policy, what you carry with you is your base sum assured. So whatever your base sum assured is, you carry that with you. And what you carry with you is any pre-existing disease years that you have had. Suppose you've been with that policy for 2 years, and the new policy you're going into has got 3 years pre-existing disease exclusion. Only 1 year remains, right? However, your add-ons can only port if the same add-on is available in the other plan, and that is usually unlikely. So if you have bought a 10 lakh rupee or a 5 lakh rupee critical illness rider, there is a very strong likelihood when you move into the new plan that rider does not exist in the new plan. So porting may not be a great idea with riders. Your riders will, in a large majority of cases, have to be restarted, so to say.
All right. So, that's all the time that we have in this section. When we come back, we're going to be taking your questions, but you can write to us at queries@policybazaar.com, and we'll see you shortly after this break. Keep watching. Welcome back to Policy Bazaar. I'm Arjun Bhagat, and with me is Yashish Dhaya. And before he takes your questions, I have one question about maternity. Now, is that an add-on plan that is available with your regular health plan?
Usually not. So you do have two separate plans mostly, maybe from the same company, one which covers maternity, one which does not cover maternity, or one which covers maternity earlier. Also, maternity usually has waiting periods. So there's only one plan in the market that covers maternity straight after 9 months. But most other plans would have a wait period of 2 years to 4 years. And no, it's usually not like a tick box, would you like to cover maternity and pay 1,000 rupees extra. No, that's not the case. So it's not a rider. It's usually a separate plan which may have maternity included in it. That's how it operates.
Right. So what you're basically saying is that go for it as a independent plan.
If you wish to go for maternity, then you have to choose the plan that is right for you. Whether you think 2 years wait period is sufficient, or you want something which is in 9 months. There is a plan available in the market which starts operating at 9 months, but obviously it's going to be more expensive as well. So Religate Joy is available, which would cover within 9 months, but it's going to be almost as expensive because it will basically say that, look, as long as it's a basic normal delivery, I'm just going to take those costs up front from you.
Right. It's question time, and Saurabh, who's 24, has written to us. He recently started working, and his family has been advising him to buy a health insurance plan ever since. He wants to know if he should get one right away, or is it okay for him to buy a health plan a few years later? I mean, given that he's 24, what should he do?
I think he should certainly buy a health insurance plan. I would never advise anybody
But that's a reluctance that one sees from a lot of young people, that we'll buy a plan in our 30s or 40s or when we get married.
Think about the cost. Saurabh, you buy a 5 lakh rupee plan. At your age, it's going to cost about 300 rupees per month. Just think of the things you spend that 300 rupees on every month. It'll put some perspective back. That's what I say. All this risk planning, etc. I don't want to bore people with kind of that this is the only thing you do. But once in a month for 10 minutes, think about it. You know, what all do you spend 300 rupees a month on? 300 rupees a month is roughly about 10 rupees a day. It is much lower than the toll charges people pay going from Noida to Delhi or anywhere else. In fact, it's 1/4 of the toll charges that they would pay.
Yeah.
So it's much lower than the coffee. Than it's like a cup of coffee at a barista or something. I have nothing against barista or the expenses, but the point is, it's like there's a lot of things we spend money on. It's way lower than the cost of a movie ticket once in 3 months. So if you saw a movie once in 3 months with family, your health insurance might be less expensive than that. So put it in perspective. It's less than the cost of a pair of jeans once in 3 months. So just put it in perspective and then take the health insurance plan. Obviously, you'll find that the health insurance plan is a much higher priority and a much lower cost than a lot of other expenses you're taking on. Yes, it may not have immediate rewards for you, but just in case things go wrong, and that's what insurance is for, you will be left far better off. Would you kind of like to lose 3-4 lakh rupees if you had God forbid, if you had an accident and you're down 3-4 lakh rupees? And we've had a lot of cases of young people. So in our organization, we've had some very young people with various kinds of diseases and costs going up into lakhs. You don't want to be in an unfortunate situation where that comes out of your personal pocket.
And this goes into that whole debate about why we as a country are so underinsured.
We haven't thought about it. We haven't matured as a people to think and see that debate. I hear a lot that, we'll pay the premiums, but we'll never get the claims. That's history. Boss, all private insurance company claims in health insurance, once the claim is submitted, are usually cleared within about 6 hours. In the cashless hospitals. The cashless hospital, 96% of claims are covered within 6 hours in the cashless hospitals. So the claims are being paid. There are whole third-party administrators, there are whole hospitals making their revenue models out of this. So for a consumer to believe he will not get paid claims, I think the person is living maybe 20 years ago. So things have changed, and hence people need to move on and take on these products. Is that straightforward?
Right, we've got Prateek. He's 35 years old, and Prateek and his family, a wife and a child, are covered under his employer's group insurance plans. He wants to know whether his family could continue to avail benefits if something were to happen to him in the future. Yes.
See, if you are under a group health insurance scheme of your organization, that only covers you till you are employed. I do not know of, unless you're the director of the company and you've got a very special plan created for yourself, which also I'm not aware of. It's very unlikely that when you stop working with the company, or if something were to happen to you, something unfortunate were to happen to you, you would still be covered. I have, in the last 15-20 years, seen lots of cases. Companies are usually nice. So if some bad event happens, the companies usually are supportive up to maybe about 6 months to a year or so, and they will usually take losses of up to about 5 lakh rupees, 7 lakh rupees. See, companies also can't do more than that. It's not possible for them. So at some point they will just back off. And that is in addition to your base health. Your base health plan will end the day you leave your company. Your company health plan will end the day you leave the company. And also companies will not keep paying a salary if somebody is not going to be able to turn up to work for more than a year or so. That's what I've seen in practice. There may be some very, very rare companies that, if somebody who's 25 develops a serious kind of cancer, lives for the next 20 years, and the company keeps paying a salary for the next 20 years. Very, 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 very rare, extremely rare. Usually it's 1 year and they kind of find some way to kind of wriggle out of it.
Right, we've got Anshuman, and he says his family floater plan that covers his parents, wife and 3 children. He has one, and his friends have been asking him to buy a separate health plan for his parents. He wants to understand the challenges he may face if he retains his existing plan. He cannot afford to buy individual plans for his parents, though. This is what he says.
No, I think he should look at purchasing individual plans somehow and not group them into his family floater plan. The cost of his family floater plan will go up tremendously if he includes his parents in it, and will be far higher than the cost of the individual plans he could purchase for his parents. If he's having difficulty buying standalone free health insurance plans for them, maybe he can purchase senior citizen plans, which actually have lower cost and lower medical formalities, so that you can get the plans far easier. There will be some element of copay in those. but only go for those plans if you are not able to get the base health plan. And I definitely suggest please go for health insurance plans for your parents. I'm sure you care for them, and the savings that you make by not purchasing those plans will not be worth it in case one of the diseases were to impact them. So I would seriously say please reconsider that concept that you may not have capital for purchasing plans for your parents.
Right. We've got Anubhav, and he's 40 years old, and he has a health insurance plan running since the last few years. He was recently diagnosed with diabetes and wants to know whether this would prompt the insurer to increase the premium amount later on. Yashish.
No, it would not. See, the beauty of purchasing a health insurance plan is that if you are struck by a disease, just because you're struck by a disease, in many cases, your premium does not go up. You are protected. And there are also specific plans which even have no claims-based loading. So even if you make claims, in this case he's not made claims yet, but even if you were to make claims, your premium would not go up. Why is this? This is because once, and I think it's very fair, when a company takes you on as a risk, they can assess you as much as they wish. But once you are taken on as a risk, now you are their risk. After this, if something unfortunate happens, it is not your fault, and the company should take on the cost of that. And under that principle, this concept of no claims-based loading exists. But even if you do not have claims-based loading, just because you've got diabetes does not mean your premium goes up. You are locked into a particular plan for life, and these are renewable for life. The company can neither deny you nor increase your premium, specifically if you've not made claims. There may be claims-based loading, or there may not be claims-based loading in your particular plan, and it depends on that whether your premium will go up or not go up. So, but for people who've not purchased a plan, claim-based loading is, I think, one of the most prominent factors they should consider in purchasing a plan.
Right, Yashish, that's all the time that we have. Thank you for joining us. And last week we asked you a question, what does NCB in insurance stand for? And the correct answer is no claims bonus. And the winner is Gaurav. Congratulations there. Now this week's question is, what does health card offer? A, cashless hospitalization in network hospitals. B, reward points. C, life insurance cover. And you can write in your answers to queries@policybazaar.com, and we'll see you next time with another episode of Policy Bazaar. Thank you once again, Yashish.